Let's take a look now at the markets across the continent, and we'll be starting with East Africa in Kenya. And the NSE 20 touched a four-and-a-half-year high of 5,030 during the week last week. And if we see there, it was just 0.2% up on the Friday, 1 month 0.2, but a four-and-a-half-year high, as I say, and went down back again to 4,985. Some of the investors there were taking their profits. And the shilling broadly has been quite strong. Looking at the shilling there, 0.12% up there, 84.7, mostly due to the confidence and the calm that has come after that reassuring confirmation of the presidential election, and investors also like that. So both the currency and the market have been looking strong because of that political confirmation. But let's now talk about what's been happening in the market in Nairobi for our Kenya market update. Ted Macharia, he's investment analyst at AIB Capital. He joins us from Nairobi. Good morning, Ted. Perhaps we could start by talking about that four-and-a-half-year high, not quite sustained to the end of the week, but that's good news for investors.
Morning, David. Investors are realigning their portfolios to match their optimism and are refocusing on fundamentals. We've seen a lot of foreign investor demand grow, as well as retail investors who came back in very strong. Looking at it retrospectively, Q1 2013 has proved to be very strong. We have seen the market gain upwards, and we have seen the shilling stabilize against all major currencies. Obviously, that is a function of both the optimism after the elections and perhaps currency devaluation outside Africa, in Europe and Asia. From the political front, we refocus on the supplement budget that is expected in the next few months. Obviously, for a government that is looking to stimulate economic growth and at the same time implement the constitution, the recurrent expenditure should be tamed. They are making a lot of political noise about increasing their wages, so the wage bill might become inflated. But that is all we are getting from the political front. The implications of that supplementary budget on the macroeconomic climate in Kenya. But otherwise, investors are very confident, and that optimism is being shown in the performance on the market.
Certainly a bullish mood, and also investors reassured by some of the results, and apparently in the insurance sector, some good company results there. And it's one of those times where investors clearly think that the results will get better. So there's still value to be had in that insurance sector.
Yes, we have seen the insurance sector post very strong performance. Pan-African Insurance did 56%. Britam went back into profit territory, posting 2.6 billion. Liberty Insurance was perhaps the only insurance company that made a small dip in profit. Generally, they benefited from the strong bull run in the market, as well as high interest rates that saw their investment income from fixed income markets improve. Going forward, the sector is obviously eyeing the real estate asset class, particularly in Kenya and South Sudan, with large-scale residential and commercial property. If you look at the price-to-earnings ratio of the main market at 11 and that of the insurance sector about 7, it's a very cheap sector to look into, and investors are seeing demand growing on that sector very fast.
Also, we don't often look at the smaller cap stocks on the exchange, but battery producer Everready, haven't talked about them, but it's a famous brand, is Everready. Top gainer for the week, 27.9% to 2.75 shillings. Keeping an eye on the small stocks there. I mean, sometimes the big fund managers don't like to take much interest in them, but you can make money out of them if you jump at the right time.
Yes, liquidity is a big problem on those small caps. Investors, particularly speculative investors, look to enter in low and maybe ride on some small momentum. We have seen Everready grow from 1.9 to about 270 at the close of the week. And that is just a function of growing demand on that counter. It's very hard to time the market. So right now, investors will expect some selling pressure, particularly on Eveready and Standard Group.
Yeah, Standard Group, another one expecting full-year earnings to be strong. And then let's look at the cement sector. The top loser in the week was Bamburi, the cement manufacturer, 5.5%. Bit of a surprise given the broad bullish mood. As you say, the implementation of the new constitution, there must be some infrastructure spending coming there, government involvement in the economy. So was that just a pullback in terms of profit taking?
That was just a one-off event. Bamburi, we expect the construction sector to grow, basically because of the devolution process. In the last week's trading, we saw a lot of retail investors making the trades on that counter, and that is perhaps the main reason why the counter shed, although marginally.
And then Safaricom, we talk about that often. It's one of the big shares. In many ways, it leads the exchange. That was the top mover for the week. And again, it's delivered good results, but better earnings expected from Safaricom.
Yes, Safaricom's NDR closed in March. We are expecting the NDR results in the coming few months. So far, so good. They posted about 190% earnings growth by the first half. The big numbers we are waiting to see are the numbers from M-Shwari, which is a microloan facility that they are offering with partnership with CBA Bank. And that will perhaps give us a better indication of the profitability of that sector. If you look at the voice business, it has been growing. The price wars have ended. If you look at the text business, it's been shrinking because we opt for perhaps internet or other messaging capabilities. So that will be a key figure that we'll be looking at, M-Shwari numbers and M-Pesa numbers.
Right, and just to finish off, Ted, interesting story. Motor vehicle companies, always interesting. The brands are well known. The South African company Land Rover Jaguar, or Jaguar Land Rover, has been operating in Kenya, but there's been a court action to try and prevent it, and CMC Holdings is the company involved there. What are the details there? It sounds quite technical.
Again, the automobile sector, if you compare it to the main market, is a poor performer because of the earnings. Market at PE compared to that of the automobiles, which is around 30. Their earnings do not support that price. We could attribute that reason to the cyclical nature of the automobile industry, that as incomes grow, perhaps purchasing power grows and we can buy more cars. But there are more options, online options, and perhaps second-hand vehicles, as opposed to buying first-hand. In the case of CMC and Jaguar, that is a very important case. Investors who've been locked in the counter since it was suspended will be looking to see how the court will rule against that matter, because it accounts for about 30% of CMC's earnings. So far, the whole corporate governance issues and this new issue will mean investor confidence has been dampened completely. If you look at the sector, again, they are all poor performers, including Marshalls and CMC that is currently under suspension. So we will wait to see what the court decides. But my personal opinion is that because of those issues that Jaguar raised, that JLR raised against CMC, it would make more sense for them to be given the right to move away from CMC.